Good morning everybody, so we're going to do a recap of Thursday the 9th trading session and what a day it was, right? So for those of you who are in red pool, we called it out, we knew exactly where the market was going, and some of us took some absolute bagger trades. It went to a T, couldn't have called it any better, right? So we're going to break the day down, and we're going to break down why we were seeing it as bearish and the potential entries you could have taken. But before we get into that, as always, if you're new to the channel, welcome. And if you find value in this content, please consider smashing that old like and subscribe button, because it does a world of good for the channel, and it also helps other people like yourself view this content, right? So let's jump straight into it. And I'm just if you haven't watched Tuesdays and Wednesdays recaps, I highly suggest you watch it, because I break down all of this and it also frames context as to why I took the trades I did today. So all of this is why I do daily recaps, so it can give you an indication of where I believe price is running to. Okay. So on the start of the day, I was talking to everybody and I was saying, look, we had this displacement leg here which hadn't been filled, right? And so we'd only ever got up to equilibrium, but we hadn't got into a premium before running the market lower. My general bias is macro bearish, reason being we had a market maker sell model up here in the form of reclaimed order block, and we also have reaccumulation here in the form of another reclaimed order block. So what is price not going to want to do? It's not going to want to run above this level here, because why? This is the market maker's positions short. So why on earth would they allow price to run above it? Makes no sense, right? So I was looking for lines in the sand. Lines in the sand that is going to protect this reclaimed order block, but also trap retail into believing price is going long to then slam it down and go on this massive run. This is the bias I had pre-market, and it ended up playing out to a T, right? So what do we have inside this premium range? We had this optimum trade entry. We had a mitigation block. Why is that mitigation block trade X? Why? I'll tell you why. Because we have the high, the low, the failed high breakthrough. This is now a mitigation block. If you don't know what mitigation block is, I have done a episode on them, and I highly suggest you check that out. That was my line in the sand, right? So what else was there? We had if we jump onto the 15-minute chart very, very quickly. Where was it now? Chart's getting a little bit messy because I did quite a bit of teaching recently. So we had this rejection candle here, so I had 50% of that marked out. It wasn't the strongest, but it was there. So that was my levels I was working to. It also coincided with 2.5 times standard deviation from this swing low. Alright, so let's bring this back out, and it wasn't that, that's today. What did we have? What did we have? I'm not going to go through all this because that was yesterday's trade. That was the day before's price action, so that was Wednesdays. I'm going to look at Thursdays, right? And this is what we had. So we had the data come out, and we had this long Judas swing which was trapping retail in long. And where is that mitigation block which is drawn out? It is here. I got in at 40.16, and so you can go and check my trades on Twitter, and they are all there to see, complete transparency, and I wrote it down. And I was happy with that. I took my 10 handles, and I said to everyone, because I had stuff to do, I wasn't going to get in, but I suggest looking at this mitigation block for entry short, because I believe the market's going to tank. My idea was to come back in the PM session to take a trade, but other events took place, and so I didn't manage to get around to it. Where could you have got back in? We had a 15-minute volume imbalance, right? So we had a 15-minute volume imbalance on the swing high here, and this acts as support and resistance, right? So if the volume imbalance is there between lows at the swing high, we drop onto the 1 minute chart. Let's have a quick look. This is today's action, Jackie boy. We can see during the lunch hour, it pinged it. This would have been your entry to run it lower, okay? Now, price ultimately found its objective right back down at Thursday's RTH of last week. And that is the run we ran through. I'm not going to break down this price action today. I'm just going to keep this one nice and short and sweet. But I called out a level live. I called 14.13, and that was a standard deviation move from the highs. And I was expecting a retracement for this level. So I'll break down this trade. This is a trade I took live in Discord. I got in at 13 out of this SIBI. And why did I take it? I took it for that standard deviation reason I was mentioning before. But also we had this SIBI up just below this swing high. And for those of you who know, I like to target these and then use these as support and resistance. I had these relative equal highs that I believe were a target, and there was also a 5 minute, this is actually a 5 minute SIBI here. Okay, so if you just drop onto the 5 minute, it's really annoying how it flies you about. There it is, the 5 minute SIBI just there, right? Now if we go back onto the 1 minute, so I took my entry on the 13s, rode it high, then we've got this order block form. This candle came back into it and formed a propulsion block. I kept coming up, it went back into the medium threshold but was respecting it. Finally ran up and took me out on this SIBI. I had a position to run through to this old high, but it stopped me out because I wanted to see this SIBI act as support, and it broke through, so it took me out. It did come all the way back down into this order block, refilled its boots before just punching through just before the close of play, and then it's obviously ran down and closed below. So the reason for this video today is just to give you an indication of, you know, having confidence in your bias when your bias is formed from previous days. And we knew that we had multiple accumulations for going short, and we were therefore looking for price to run up to trap retail and then looking for a trade entry. Okay, I will just break down this piece of price action for you, okay, because this is another trade you could have taken, and this was the 2022 model, right? The 2022 entry model. So you had the buy side got purged, you had the market structure, it got broke with displacement, and what was left behind? A fair value gap. If there's no fair value gap, there is no trade. And you could have entered there to ride it down. That was another potential entry within that price action, okay? That's going to be it for me today. I'm going to keep this one really short and sweet. It was a beautiful day. There's lots of stuff to get your teeth stuck into. So if I don't catch you for the rest of this week, if you're not over in Red Pill, I will catch you early next. And as always, trade safe, trade smart. Today we've got non-farm payroll, and I will see you as always on the other side. Take care. Bye.